Hi, welcome to the Market Alert for Thursday, the 9th of January 2020. So, no surprise here, is there? Stocks soar after Middle East de-escalation, but sparks a crude carnage and bond bloodbath. So, let's have a look. Like I said yesterday, it's no surprise, is it? Given the manipulation in the market. So, we see yesterday the market coming off the lows and trading through the 76% retracement in the daily. We just need to take out the all-time high now at 28,910 and 29,000 will be seen by the weekend, and in particular given the fact that we got the non-farm payroll figures out tomorrow as well. Today though, we've just got Barmy Carney speaking. He's out at 9:30, and that's it. That's all you've got today here news-wise. So 9:30, Carney will be speaking. But yesterday, like I say, it's a set piece really. We get the market opening, we get the big bar, we get the buying. We then get those who went short on the news being absorbed. We then see some more buying, bit of indecision. Market moves higher. We get the classic retracement. Where does it retrace to? 20 bar moving average. They test the market at this level, and then we see prices move higher by 200 points. And as the market then springs into action, this is Trump saying everything's fine with the world, the market then trades sideways as normal. Everybody goes for lunch, hugging the 5 bar moving average there, coming below it a couple of times again, but with tests. They're just testing to see if there's anybody interested on the downside. There's no selling, and the market then is free to have a run for the last part of the session, up another 50 points, and then we see a 100-point profit taking just before the close, which is unusual, I have to say. But there's probably a lot of traders who count in the blessings that they managed to squeeze so much out of the trade. The market then trades on a bounce. Again, you can see this quite clearly. About a 62% retracement from this high. And then overnight, the fun hasn't finished yet. We see the market shake out here and then buy back. And ever since then, it's been moving to the upside over 50 points once again. So like I say, it's not difficult to read this market. I don't mind if the manipulation continues for the next 20 years. So it's fine by me, because it's so easy to read and so easy to trade. It's just a joy watching the markets move in these predetermined directions as they try to keep the illusion alive that everything is fine and well with the world. I mean, even the selling that occurred here, next bar, it's all absorbed and off we go again. It's, keep it up. It's fine by me. And then in Bitcoin, we've got the market coming under pressure because obviously the threat of war seems to have disappeared, and now we have sanctions in place. And Bitcoin struggling a bit there, coming off the highs yesterday. A lot of volume, so again, our price is going to return to the downside. Well, it's looking weakish. The 4-hour needs to hold above the 20 bar moving average. And in the 15-minute, you will see that we are back below the 200. The market getting a bit wild yesterday afternoon. We've got a retracement, 76% there to the previous day's high. The market then trading down to the 200 MA, eventually breaking. The market's tested, but as it bounces back, it then closes back below the 200 there, and is now struggling and going into a sideways range, which you can see there, back in that $50 predefined range, as we've seen for some time. So still not a lot happening there. It's not consistent enough to devote the time to sit watching bars of this size at the moment. But then we don't need to, because we have the Dow to play with, which, like I say, is incredibly predictable. And you have to go back and look at the hundreds of market alerts to hear me say about the manipulation to the upside and how long it will continue. The other thing, of course, is the implied volatility. This is also marked down. No shakeout this time, no correction. as we've seen before, where we've got these corrections happening in the market. We're not allowed to even have corrections in the market anymore. The last one was back in October. We had a bit of a one in the beginning of December, but that lasted all of 2 days or 3 days before they got the market back up on the highs. Volatility dropping off. Sell the VIX futures contracts into the market by the Fed's trading desk, and you have a market that looks fantastic on paper and is engineered and designed to get the weak traders in there to part with their money, while the pros at some point will offload their positions, knowing full well it is seriously overvalued, as we saw in Monday's alerts. And I'll just remind you of this, just to show you the trajectory of this market from 2009, which, whoops, gone too far there, which you can see here, up nearly 23,000 points from the lows. Interesting that we've got a lot more activity around this level. The volatility has picked up, but they're still driving to the upside. But that's the picture. This is it makes the 2008. If I just reset this for a second and drag the chart over, if we have a look at the 2008 correction there, you can see, if I just need to go back to 2003, you'll see there that we had over 100% correction when the market did correct with the crisis, and since then, well, we're off the scale, aren't we? We can see this, that prices just continue to head into the stratosphere there. Okay, that will do it for this one. Like I say, the buy side's the best side. As far as I can see for the moment, the manipulation is brazen and clear to see at this time. Okay, that's it for this one. If there is anything else to report, I will let you know. But otherwise, as ever, thanks for watching. See you in the next one.